All right, everyone, get ready for the deep dive today. We're tackling Piper Sandler, PIPR if you're on the stock market, and we're diving into their 10Ks. Got them from 2020 to 2023. I know. Sounds thrilling, right? Like watching paint dry. But these reports, they're like financial treasure maps, and we're going to figure out what's buried there.
These 10Ks, they can seem kind of scary, but really it's just a company using numbers to tell their story, And once you get how to read them, you can really see their whole journey, wins, losses, and maybe even get a peek at what they're planning next. It's pretty cool.
So what you're saying is I don't need to go back to school for a finance degree to understand this. We can, crack the code together.
That's the plan. Think of me as your finance jargon translator. We'll cut through all that noise and turn those numbers into a story that makes sense, even if you've never even looked at, a balance sheet before.
Okay, that's definitely my kind of language. So we've got 4 years of financial reports here. What's the quick version of what went down with PIPR during that time?
Well, first thing that pops out is 2020. Big year for PIPR, acquisitions-wise, that is. They went and acquired 3 companies, Sandler O'Neill, Valence, and TRS. Bold move for sure. Shows they were thinking about growth, expansion, all that.
Whoa, 3 companies in 1 year. They weren't messing around. But hold on, something like that's got to put a dent in their cash flow, right?
You're right, it did. But here's the thing. 2020, they also issued a special cash dividend, $1.85 per share. So they were feeling pretty good about their performance, enough to share the wealth,
Okay, so spend some, share some. Got it. What happened next in this whole saga?
2021 was all about talent for them. They really zeroed in on getting and keeping good people, especially because finance is so competitive. Diversity and inclusion initiatives, too. Recognizing that a strong company culture leads to innovation.
Smart move. Any company is only as good as the people working there, right? Investing in your people, that's investing in the future of your company.
100%. But here's the catch. No company exists in a bubble. 2022 rolls around, and we see those bigger economic forces everyone was feeling start to have an impact.
2022, the year we all love to hate.
Right. PIPR's report, it talks about those challenges, especially for their equities, investment banking sector, macroeconomic stuff. They also get into how they handle credit risk. Really important when times are a bit rocky.
Risk management. That sounds like a whole other deep dive waiting to happen. But for now, I'm curious, how did they do? Did they make it through that storm? Okay.
Well, that leads us right into their 2023 report. And in this one, we see they're still all about expansion. Specifically, their corporate investment banking division. They really grew their team of managing directors, significantly. So could mean they're getting ready for even bigger deals,
More managing directors.
Yeah.
Those guys don't come cheap. Good sign, or are they getting a little ahead of themselves? What do you think?
It's a bit of both. Ambition can be a good thing, but also risky. But here's something interesting. 2023 report also mentions how they handled the whole LIBOR transition.
LIBOR. Okay, remind me what that is again. Why was that a big deal?
Right, so LIBOR, London Interbank Offered Rate. It's like this benchmark interest rate used all over the world. But it was being phased out, gone. Every financial institution had to figure out how to adapt to PIPR. They managed it without much trouble, no big impact on their financing. Shows they can adapt. And in finance, that's huge. Things are always changing.
Okay, so we've got the broad strokes, but I know just from flipping through, these 10Ks are full of details, little things. And I want to dig into some of that. What do you think?
Let's do it.
Where should we even start?
Well, we talked about credit risk, right? But their 2020 report, they actually have a whole section on something called concentration risk. Basically, it's the danger of relying too much on one thing, like one product, one client, even one geographic area. Yeah.
Don't put all your eggs in one basket kind of thing. Classic.
Exactly. And PIPR seems to get that. They talk about how they use different policies, limits to spread things out, manage those vulnerabilities.
So spreading the risk makes sense. But even if you're doing everything right, sometimes things just happen, don't they?
Oh, for sure. And you know what? PIPR actually says that in the 2022 report. Straight up acknowledges that you can't predict everything, can't always mitigate every risk.
And I can respect that. Like they're being real. Hey, we're doing our best, but the unexpected happens.
Transparency is good, especially in finance. Builds trust.
Totally. Okay, where to next? Oh, what we haven't touched on yet? Those acquisitions. From way back in 2020, there was more in the reports about that.
There was. Their 2022 report, it mentions a goodwill value, a pretty big one, $301.2 million. And they talk about having to do these impairment assessments.
Okay, hold on. Break that down for me. What even is goodwill?
Good question. It's like The value of a company you can't really touch. Brand reputation, customer relationships, things like that, adds to their worth, but it's not like inventory. So when a company gets acquired, goodwill is often part of what's paid on top of the actual assets.
So it's like the it factor makes a company worth more than just the stuff they own.
You got it. But because it's based on these less concrete things, its value can change, up or down. That's where impairment assessments come in.
They're checking to make sure that $301.2 million is still accurate.
Yep. And here's what I find interesting. 2022 report, it says those assessments. Ongoing. So who knows how the market or even just how well those acquired companies are doing might affect that number down the line, something to watch.
Ooh. Okay, now that's what I call leaving us hanging. Like we're getting a little preview of potential future drama.
Financial reports, they're not just about the past. It's an ongoing story.
Speaking of stories, there was one other thing from these reports that I wanted to circle back to. The employee agreements. We saw that in the 2020 report, right? Why were those even in there?
Oh, those agreements. It's transition services, restrictive covenants. It's basically about how PIPR deals with, like, employee mobility, competition within their industry. So what happens if someone leaves PIPR? Can they go work for a competitor? Can they try to take clients with them? These agreements lay out those rules.
So protecting their interests, their relationships, all that.
Right. Especially in finance, talent is everything. And those client relationships, that's gold. So it makes sense they'd want to protect that.
Like they're playing chess, thinking several moves ahead. But even with those agreements, they're still talking about attracting and keeping good people in that 2021 report. That was a big theme. So it's like they've got these agreements trying to lock people in, but it still seems like they're worried about losing their best people. What's the deal? Is it all about the money?
Well, money is a big part of it, for
Mhm.
sure, especially in finance. Everyone's trying to get the best people, so
Yeah.
they pay up. But PIPR, I think they get that. It's more than that, too.
Right, because they talked about culture in that 2021 report. Diversity, trying to make it a good place to work, not just a paycheck.
Exactly. It's about creating a place where people feel like they can grow, do their best work, and that's what attracts good people, makes them want to stay, especially in a job market like this one.
So it all comes back to the big picture. All these reports, what are they telling us about PIPR? Where are they headed? What do you think?
They're definitely focused on growth, that's for sure. Those acquisitions back in 2020, that tells you something. Not afraid of a little risk, but they're not being reckless either, at least from what I see here.
Yeah, they're putting in the work. We talked about those concentration risk strategies, goodwill assessments, and their homework.
Right. Being proactive, always a good sign. And that LIBOR thing, handling that transition smoothly shows they can adapt. Finance is all about adapting, really.
True, true. But it hasn't been all sunshine and roses, has it? 2022 was rough. Everyone felt that. And what about those acquisitions? Big question mark in my mind. Did they pay too much? Will it pay off?
You got it. Those are the million-dollar questions. Will corporate investment banking take off for them? Will they keep paying those dividends? Only time will tell, really. But it's going to be interesting to see what happens.
It's like we watched the trailer,
Yeah.
and now we got to see how the movie ends. So anyone listening who's thinking about PIPR for their portfolio, what should they be paying attention to? What are the big things to watch?
Those acquisitions are big, huge, actually. How are those companies doing? PIPR needs them to succeed. If those companies don't perform well, that goodwill valuation could take a hit.
But if those acquisitions kill it, sky's the limit, right? High risk, high reward. What else?
Keep an eye on that corporate investment banking division. Are they closing those big deals, getting those big clients? That's where they're putting a lot of their energy, it seems like.
And we got to talk about those dividends. Can they keep paying them out while they're also trying to grow the company like this? Tough spot to be in.
Definitely. Investors love those dividends, but you got to spend money to make money, right? Be interesting to see how they handle it.
You know, I'll be honest. I started this whole thing a little nervous. These 10Ks, all these numbers. But you've made it make sense. Kind of fun, actually.
They're just stories with a little more, financial jargon thrown in.
And PIPR's story. Definitely not over yet. I'm invested now. Got to see what happens next. All right, everyone, that's it for our deep dive today. Keep those financial reports coming. And remember, knowledge is power, especially in the world of finance. See you next time.